Go time, go time, go time. Back in the action here once again. Hope you guys had a great day out there. Time to get back to work. It's Wednesday evening, November 13th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, great to have you here with me because I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is to help you guys find the best levels of support and resistance, the best entries and exit setups for tomorrow, and most importantly, how to avoid some of those easy traps in tomorrow. That's Thursday's trading session. And tonight, we're going to break this all down and put the plan together for tomorrow's trading session. We'll grab some charts. We got some oil, some S&P, some Nasdaq, and some of that yellow metal. We'll grab, of course, that calendar for tomorrow. We got day 2 with Powell tomorrow as we go into the end of the third week of this month. I'm going to jump in here first tonight, though, on oil because, oil, right? Boy, did they get a gift from OPEC this morning. Oil was dead asleep right about 9:30, and what happens? OPEC comes out and shoots this market higher. Now, everybody saw the market going higher. But what didn't we see today? Because I really think on oil, it's what we didn't get that might be the most important clue for tomorrow's trading session. Let's grab that chart here on the black gold, the Texas T, and let's see if we can put a plan together here for tomorrow's trading session. So like I said earlier, oil was ultimately dead to the world. We were checking the pulse on this thing around 9 o'clock, 9:15 this morning. It looked like it was going to be a relatively slow day, and then all of a sudden, right, the market just takes off to the upside. What happened? Well, OPEC, right, like they normally do this time of the year, right, as we go into the winter time months, demand for oil tends to dry up, which means it's about time for OPEC to anticipate a production cut. Well, we heard the headline come out this morning that OPEC's now saying, yeah, we're going to be cutting production in 2020. Now, we'll talk more about this tonight on the video, but this is not the first time that OPEC has tried to inflate prices by rumoring up, right, a production cut. But the bottom line is, no matter what happened, the market jumps higher in the wake of this so-called production cut coming from OPEC. And I'll go into more details on why I say that a little bit later on in the video. But this one thing didn't happen, right? We never got a nice deep pullback. Usually when you see a market make a run like that, usually what will happen is it'll double top and then give you a nice deep pullback. And you can buy that deep pullback because remember, most professionals, they're not going to chase after it, right? Professionals are not going to chase after that market as it's going higher. What they'll do is they'll wait for that deep pullback. And that's exactly what didn't happen today that I think is the biggest clue going into tomorrow's trading session. Now, it's pretty easy to see it's bullish into a trading range. In fact, you could even say this is kind of like an expanding triangle there if you wanted to. But the reality is we're range bound, right? The market is trading mostly sideways here with an obvious bull bias. Now, with this said, we know we haven't seen that pullback, and that would really, really be nice. Get a pullback down below that trading range. I've got a bunch of support levels I'm watching here for tomorrow. And tonight, what I'll do is I'll put together a couple different entry patterns I'm watching for if we can get that pullback. For example, I can think of 3 different entry patterns I'll be looking for if we can get that pullback. What if we don't get that pullback though? What if the market continues going higher? Well, if we continue going higher, we have to see what I call acceptance up here. And we'll talk a lot about what acceptance will look like because the S&P and the Nasdaq are waiting on acceptance as well. I have a term I use quite a bit in my trade room called acceptance or rejection. And right now we're seeing nothing but rejection. So tonight what I'll talk about 2 very specific scenarios I'm looking for here to get that acceptance, that green light that we're going higher up to that measured move at 58.10. We haven't seen a good pullback yet. I'd love to be a buyer on this pullback. Get me down underneath that range. Get me down to the low of that channel. If we don't though, and the market keeps going higher, I've got a very important plan to look for to qualify that move going higher with acceptance or rejection. If you're an oil trader, you're going to definitely want to stay tuned for more of this tonight on the oil chart. How about some S&P? Now, the S&P has quite a bit going on this chart, right? We're going to unpack a lot of this tonight on the video. But the most important thing right now that you want to make sure you see on this S&P is you've got that real strong move move up, that pullback, and you'll notice we are right about retesting that high. Now, I call this a pullback and a retest. This is exactly what usually happens on a strong move like oil, right? So remember what oil hasn't pulled back yet. This is what usually is waiting for us on a market like oil. We didn't get that pullback on oil. That's what we're waiting for, that pullback right now. On the S&P though, they got it, right? Get that strong move up. They got that pullback, and now they're trying to slingshot now up to that measured move. Obviously, the big round number will be a pit stop along the way, but this one big problem, we have zero proof right now that this little guy, this 3097, this level's been on here right for a while, right? That goes back there quite a ways. That level seems to be an area of resistance. So looking at the S&P here tonight, we know we're bullish, that's for sure, but this is definitely not the place to be buying. So really what I have to look for is, do I see acceptance? Do we see acceptance going through that high? And at that point, I'll talk about two patterns I'm looking for to buy up there, because we don't just want to buy the breakout going higher. That's not a very good strategy to use overall. But what if we don't get acceptance? What if we get rejection, right? Rejection is definitely possible. And if we get rejection off that high, oh boy, I've got some great levels down here. I got my range expansions, my falling support trend lines down here. And we'll talk about three different patterns to look for on that pullback as well. Will we get acceptance? Will we get rejection? We're going to talk about that in more detail tonight on the S&P. Whatever you do not be buying right now. You're too late to be a buyer right now. We've got to wait for more information, and we're going to break all this down together tonight on the video. I'll also talk about where I get all these other trend lines from here tonight as well. And of course, last but not least here over on not last but not least, second to last, right, but certainly not least, is the Nasdaq. The Nasdaq is, although it doesn't look as dramatic as the S&P, it definitely is a very similar scenario here, right? The bulls, of course, got back on their horse. They ran the market higher. They got smacked back down. And you notice they're trying to retest right now, right? We're looking for that same pullback and retest anytime we see a strong move in one direction, right? We should see that deep pullback and a retest. But this does not look very good right now. It looks like that prior high up there seems to be an area of almost bulletproof resistance right now. So really at this point, do we get the acceptance going through the high, trying to get back to that big round number, or do we get rejected off of these highs? And if we do get rejected off the high, I now want to treat this like a range-bound market and buy underneath that low. I've got my range all set up. That's going to give me my support levels down here. I got some great levels of support I'm watching for. All we need is, again, do we get acceptance going higher? Do we get rejection going lower? I'm going to talk about the specific scenarios to look for, what to buy, what to sell, and when to sit on hands, because tomorrow might be a lot about what not to do instead of what to do tomorrow on that Nasdaq. Last but not least here, now finally last but not least, is the gold. Now, you can obviously see gold's same spot as the oil. Got a nice strong move up. That's not right. That's definitely no doubt about that. We can easily see that. But what's happened? No deep pullback. That's for sure, right? Anybody who got to the market late this morning, they're still waiting down here trying to get some pullback, right? They're still waiting down here trying to get some pullback. So you know there's a lot of buyers that are waiting down here, just drooling over that area, right, to buy underneath that trading range. And again, look what happens. They run up, they pull back, rejection. At some point, those buyers are going to get a little bit fed up with buying high right now, and they're going to go looking for a lower price, and I'm going to be ready for that lower price down inside that 1458 to 1456 area. As you can see, get a lot of great levels of support to use down there. And again, we'll unpack this and put this all together here for tomorrow. But I definitely would like to see this thing to pull back here on gold. Or if we go higher here, I'll tell you, there is definitely potential on gold for tomorrow for a short covering rally. Short covering rallies, or melt ups as we've called them recently, these melt ups, these short covering rallies, they have a very distinct personality. So if you're a gold trader, you definitely want to make sure you stay tuned for more here tonight on this video, because as always, right, we're going to break down all the different scenarios, up, down, sideways, and we'll talk about the specific entry setups to look at. So all ready to go here right now. Get the gold ready to rock and roll. Nasdaq, S&P, everything's kind of waiting on a little bit more information. Now, before we jump in and really unpack all of this, let's check out the calendar for tomorrow. Grabbing a look here at the schedule for tomorrow. Tomorrow is Thursday. It's November the 14th. Tomorrow is day number 2 of the 2-day Powell testimony. As I mentioned in last night's newsletter, I don't think the markets care too much about what he's saying right now, because the gig is pretty much up. Everybody knows, or at least we anticipate, based on what he's told us recently, they're probably not going to be raising rates anytime soon, unless, of course, the old data dependent, right, those numbers start changing here for us. So I don't anticipate Powell to have too much staying power for tomorrow. You know, we heard the testimony today. Didn't really surprise many people. But again, tomorrow he'll be back for day number 2, starting at 10 o'clock Eastern time. Same speech, same stuff. There'll be there'll obviously be a little bit of a stop and look and watch, to the person out of the market tomorrow. But really, for the most part, I do not anticipate Jerome Powell having as big of an impact as it had today. What I would expect for tomorrow is some more of the shenanigans on Capitol Hill right now with this impeachment. A lot of people are tuning in just to kind of watch that circus, right, as it comes to town, right? The never-ending circus on Capitol Hill right now. That has more likely of distracting traders and taking away from price action personality tomorrow. So day number 2 for Jerome Powell, I don't expect too much. I expect more out of the impeachment as far as the distraction from what's really going on in the markets tomorrow. And then, of course, as far as news goes for tomorrow, we got jobless claims and PPI. Anytime we see PPI, CPI, what do we think? Gold, right? So definitely anticipate gold to be a little bit jittery tomorrow around that PPI number at 8:30, and then look for some nice big moves around 8:45 to 9 o'clock on gold as it breaks out of that consolidation. That usually comes after those index numbers, right? Consumer prices index, producer prices index, right? We saw one this morning that really kind of shook the gold market up pretty good. So we know we're going to probably get some stuff tomorrow morning at 8:30 that will be messy on the gold. Hopefully we can get some big moves in the wake of that news. And then don't forget, tomorrow, 11 o'clock Eastern time, we also have that petroleum status report at 11 o'clock tomorrow. That is not your typical time, because, again, Monday was a holiday, right? So Monday being a holiday, everything gets pushed back 24 hours. In the case of the weekly crude oil inventories, it'll be at 11 o'clock tomorrow. I really like it, to be honest with you. I really like it when the oil inventory report is at 11 o'clock, because it gives us almost a full trading session in the morning. Now, again, this only applies to oil traders for tomorrow. This will not apply to any other markets, just oil. And what you want to remember is, as of about 10:45, this market will usually start calming down, start to sideways out, volume will dry up, personality will be very difficult to trade. And that's because you got that big news report coming out at 11 o'clock Eastern time. So, my advice to you tomorrow, if you're an oil trader like we are in our trade room, is the exact same advice I would give you anytime you've got major news on oil. And that is, get to those trades early. The earlier you get to them tomorrow, the better off you will be. 10:45 will be my official cutoff ahead of that 11 o'clock petroleum status report. And then really there's not much to trade after that number comes out, because you're running right into lunch. So be very careful tomorrow after 10:45 on crude oil. Again, only crude oil is what I'm working with on this report for tomorrow. Get to those trades early. Get out of those, right? Get out of there early. 10:45, button it up, enjoy your lunch, and we'll come back and trade it again on Friday morning. So early in, early out for crude oil traders, right? Don't forget, Jerome Powell probably not going to be that big of a deal. I will be keeping my eyes and ears open, though, right, on kind of how how it does impact us. Like I said, I would expect some of those kind of known unknowns to be more impactful tomorrow. The U.S.-China trade talks continued, right, are a known unknown. The impeachment circus, right, is a known unknown for tomorrow. Those may distract from the price action and may give us something to be concerned with. Or, if we get some news out of the U.S.-China trade talks, they may give us a nice, right, big run or a nice boon for the markets tomorrow to give us something to look forward to trading tomorrow morning. And again, you get that PPI number bright and early, so be careful if you trade in gold around 8:15 to 8:45 tomorrow morning. And then don't forget, we're going to put the plan together tonight, and then we'll go out and we'll trade the strategy together tomorrow like we do every morning, right, in our trade room. All right, let's not waste any more valuable time. I appreciate you guys sticking around with me tonight. Had some technology issues here in the office, but we're getting it done, right? That's what the 1% does, right? The 1% finishes what they start. Let's jump into some crude oil here first. Let's unpack these markets and get this baby ready for tomorrow morning. Don't forget, we are watching rollover here as we go into the end of the week. Rollover usually is around the 18th of the month, but because the 18th is next Monday, you'll notice next Monday is the 18th. I do anticipate probably on Friday we'll have rollover on this. I am watching the market analyzer here in NinjaTrader, and you'll notice here, right, I got the 1219 contract and of course the 0120. I can't believe we're talking about 2020 right now. The bottom line, though, is we got the 1219 contract is a ton more volume than that 0120, but this can definitely change as we go into Friday's trading session. It's either going to be Friday or Monday morning. It'll be one or the other for that rollover, and of course, I'll be watching that volume rollover for tomorrow's trading session as well. Probably not going to be tomorrow. Probably will be Friday or next Monday, but I'll be sure to let you guys know what we're seeing here in tomorrow night's newsletter. Let's jump into the chart though now. Now that we know we've got the rollover on our radar, what do we know about this market? We know the market is bullish, right? We know the market, that big pullback, that big move up, but really no deep pullback here. No real deep pullback. They got that strong run up. They pulled back, pretty much double topped off that high, pulled back, didn't even get a trap low on it, and came right back up, and pretty much we're sitting right at that high of day today, right? And again, I think the biggest thing right now on this oil is, we know we're bullish. It's difficult not to call this a range. And of course, anytime I have a range on a chart, I always know I want to buy low, sell high, and avoid the middle, right? I want to buy low underneath the range. I want to avoid trading inside that range. And of course, I want to sell up above the top of that range. Now, probably not going to be a great idea to be a seller up there because of this overall bullishness right now. So I definitely do want to be a buyer. And since we haven't seen much of a deep pullback, I'd like to see a nice deep pullback, and I'd like to ideally use the low of this hidden channel, right? I'd like to get underneath that trading range, use the low of that hidden channel. Whatever happens tomorrow, though, I just want to make sure I stay out of that trading range, because obviously this 57.20, 57.30 area is definitely going to be an area to avoid for tomorrow. So let's take a look at this here for a moment, because there's a couple different ways this market may pull back, and it may keep going higher here as well. So we definitely want to be ready for that as well. So we know to stay away from the range. Now, as it pulls back, here are three scenarios that I'm watching here for tomorrow. One is going to be a relatively shallow pullback. With a shallow pullback, I'm going to look for pretty much just your straight failure, going back up into that range. If we get a really deep pullback though, right, really takes off to the downside, now what I'll do is I'll use a slight variation of that, which is a nested failure pattern. Okay, that's the second scenario. The third scenario would be it's a two-legged pullback. I'm going to draw my trend line down, and I can use that trend line now as an area of support. So those are three scenarios I'm kind of watching for here right now. If we do get that pullback, we know where we're looking, right? We know we're looking down at very least underneath this 57.03 area. So one scenario is we pull back, right, down to the low of that channel, that hidden channel I got coming in here. The moving average comes over. The sellers now, they try to sell that pullback, right? The bears now come in and they're trying to sell that pullback because they think this market has reversed. The problem is we are right where those buyers are waiting for it. And I want to be a buyer now. Once I see those sellers take that bait, once I see them try to sell off of that moving average, now we got them right where we want them. Now we know exactly where their stops are, but most importantly, now we know right where their pain points are. And I want to buy right into that stop loss area, right into where those stops are. And if we're lucky, we'll get the pullback and add on to the position, right, as we go back up into that trading range. This is called a failure into a pullback combination. We pull back down to a level of support. I want to buy that support right now. I know that sellers who are unprepared, right, to react to this, they're going to get in too early. They're going to try to sell off that moving average. And once we got them right where we want them. We can buy into their stops. We can buy the pullback, and we can run this puppy right back up to retest those highs, right? Target, of course, is back up to retest the high. Now, what if we really tumble? Right? You know, I get two buy zones down here. One, and I got two, right? If we really tumble, right, we get underneath that channel. At that point, the bears will definitely have a little bit more of an edge. They still won't have control yet. We'll talk about what a reversal looks like in a moment. But in this case, though, I want to be a buyer, right? I want to buy that deep pullback. I just don't want to buy too aggressively. I've got to give those sellers, in this case, the benefit of the doubt. So let them try once. I'll let them try twice. And once I can see those sellers have tried twice. Now, what I always tell my clients is make sure these are clearly two separate tries, right? You don't want to have to use a magnifying glass, right? You shouldn't have to ask me, for example, Joe, is that two tries? You should see obviously, right? Clearly, one try goes higher, two tries. Once you see clear separation, two separate tries, now you know again, right where their stops are. I'm looking for a buy right into those stops. And then again, I'm looking for the pullback here as we go back up to retest those highs. Target, of course, back to retest high. It's a failure into a pullback. And as you can see, the deeper the pullback goes, the more conservative of a buyer I need to be, right? The more patient of a buyer I need to be. That's one thing that is definitely important, right, on these ranges. So now that's the two, right? That's two out of the three. What if we pull back, right? We go up and make a run down. Make sure you draw that trend line. Make sure we get up and over, and then we can use that now. I call this a 2LP, or a two-legged pullback, right? Because it's got two legs to it, one leg and two leg. These are not going to happen every time, right? They're not going to happen all the time. Okay, so they will happen maybe 20-25% of the time. You want to be aware of what that two-legged pullback looks like. No matter what we get, though, no matter which of those scenarios we get, we know we're trying to get down into this area and buy this area. Because again, we really haven't seen much of a deep pullback in today's trading session. Now, maybe you're wondering, well, what if the market keeps going higher, right? What if we keep going higher here, Joe? Then what do we do? Well, you always got to know where you're trying to go, right? So let's make sure we know here real quickly, where are we trying to go right now? That 5780 area, that's the big recent top. Okay, and you'll notice, look at this, just disgusting, right? Look at that big range right there. So obviously, as we go higher, we've got one very big concern, and that is buying into resistance. So when it comes to buying into resistance, what's the best pattern, right? We know where the market wants to go. It wants to get back up to retest the 88, and obviously the measured move up there would be a cherry on top, right? But let's just plan right now that the most reliable target or the most reliable objective right now is simply to retest that high at 57.88. The problem is if I go higher here and then pull back to the moving average, if I look for a pullback pattern, I'm walking into a disaster, right? I am walking right into a disaster. What happens a lot is the market will shoot higher. The rookies will chase after it. They'll buy the pullback. And what happens is they get a little bit of profit out of it. The market pulls back, traps them out, right? All their stops are sitting right below that low. I know you probably have had this happen to you before. I know this from experience, unfortunately, right? And we get trapped into it. That's where you want to wait to buy, right? That's where you want to wait to buy. So as we go higher here, if we do see this thing shoot higher, don't get fooled into buying that pullback, because you know there's not a good reward up there, right? We're running right into a level of resistance. Let the other poor rookie, right? Let the other poor sucker buy that pullback. It'll usually go a little bit in their direction, but just watch that trap, right? Because that trap will almost always come back and allow you now to get in, right, at a nice low price. And think about what's happening right there. The rookies, right, they get roped in early. They get stopped out on that trap. What's going to happen once they see a big green candle coming back in again? The same rookies who chased earlier, they're going to jump right back in, right? They're going to jump right back into that trade. Okay, that's exactly why as we go higher here, we have to know what we're dealing with. You know, for example, gold's the opposite, right? Gold, for example, we'll talk about gold in a moment. Gold's the opposite. Gold has tons of space overhead. So we have to be more aggressive as the market goes higher on gold. We'll talk about this in a second here, right, on the gold. But that's the big issue with oil right now. If it goes higher, I don't want to buy that pullback. I want to wait for that trap low, right? Trap is the most important thing. So now we know, stay away from that middle, right? Get underneath it, buy it. We talk about 3 different scenarios to buy it underneath. As it goes higher, don't take the bait. Don't be the sucker holding the bag up there. Wait for that trap, right? Wait for that trap. Profit off the highs, leave the runner for the measured move, and we're good to go. The last thing here now, the one thing I haven't talked about is, how does this market reverse direction? Well, how does a bull market turn bearish? It needs what we call a 1, 2, 3 reversal. Ready? 1, strong move down. 2, pull back to the moving average. 3, strong move off the moving average. Once I see a 1, 2, 3 reversal, just like the bulls got theirs, 1, 2, 3 reversal, what you'll do is mark up those highs, mark up those lows, and buy that low. Okay, now, again, what usually happens is they go up, they double top, and it pulls back, right? That never happened. So the bottom line is, I don't want to repeat myself on this, but if we get that 1, 2, 3 going lower, mark up that low, mark up that high, and now sell off the top of that channel. The one thing we know right now is the target for those bears is back down to that 56.20. So again, just like the buyers got their 1, 2, 3, you mark up the high, you find the low, and you buy the low of that channel. Same thing for the sell side. 1, 2, 3, mark that move down, find that hidden channel, selling off that high, and of course, target down to that 56.20. Now we're talking. We're ready for the reversal. We're ready for the pullback, and we're ready for traps going higher. Before I keep going, though, tonight on the video, I just want to remind you, I have hundreds of examples of those patterns on our favorite futures markets inside of our free trading classes here at School of Trade. I'm going to put a link up here in the upper right-hand corner for you. Follow that link for me. Get registered as a new member of our free trading class here at schooloftrade.com. You'll love it. You'll learn my 3-step trading strategy, a very simple strategy. You'll learn my 4 favorite entry patterns, and not to mention hundreds of examples of how we apply those patterns to our favorite futures markets. So grab that link in the upper right-hand corner, right? If you're on YouTube right now too, I'll put all the links in the description of the YouTube video here tonight as well. Looking good. Let's keep going. Oil is looking good. How about some S&P? Now, the S&P is a bit of a mess, as you can see. And if you tune in every evening on this video newsletter, you probably know this is about as messy of a chart that you'll ever see from me, right? It definitely is. Again, as I mentioned in the introduction, the most important thing is we've got a strong move up. We got that beautiful deep pullback, right? I mean, look at that. Price goes down. The bears go, let's sell it, right? No, don't sell it. Buy it, right? Now, that pullback pattern probably wasn't the best area for the pullback, but that failure, this is the failure into pullback scenario I was just describing on crude oil. Make sense, right? Okay, so we got that. The big problem, though, is where's the target, right? Where's the target? If you get in on that failure back there, where's your target on that failure? Back to retest the high. Where are we right now? We're right at the high. So we pretty much, you could say the buyers got what they want in the short term. Yeah, the buyers would obviously like to get it all the way up to that measured move, right? That would be kind of the home run for those buyers right now. But as of right now, in fact, as you can see here, they still have not even retested that high yet. This is a really, really important clue. We know we're bullish, but we know that buyers apparently are rejecting the idea of buying right up at these highs. That's a really, really big clue. Because if they're not willing to buy high right now, what can we assume? If we see that buyers went up, they bounce, they go up, they back off it. What can we assume out of that? We can assume now, comfortably, we can confidently assume that buyers are not interested in buying high up there for whatever reason. You know, they haven't been prompted yet. They don't see the value in buying high yet. We haven't got the phase one deal. The impeachment stuff's still going on, right? I'm just throwing out some reasons why the markets might not be quite ready to buy high at that high price yet. Keep in mind, these are pretty much all-time highs right now. We're almost there. So we know they're rejecting the idea, right? They are rejecting the idea of buying high. But I'll bet if that price came down a little bit lower, I'll bet they would accept, right? I'll bet they would accept that lower price, right? You're in the market to buy a car. You want to buy a home. The price is too much. But the guy says, or the gal says, how about this lower price? I accept your offer, right? So we're seeing the market reject those highs right now. Where would they accept it? Well, apparently they were pretty happy to take it right there. And so that would assume now that if I could get just underneath that area, I'll bet that's going to be where more buyers are waiting. I'll bet that's where more buyers are waiting. And you can see here, I've got that trend line drawn over. I love these kind of support trend lines, these kind of falling support trend lines, because what they do is they get me in just underneath a prior swing. I'll bet buyers are just drooling over that spot right there. Now, real quick, let me back this thing up here because I want to remind you kind of the bigger picture here right now. Okay, the most important thing that we can see on this chart right now is we got this big old channel. You know, we talked about this last night in the newsletter, but there's this big channel rotating back and forth. So we have a good reason to believe where this market is trying to go. They're trying to go up to that 3105. But, you know, obviously we've also got to worry about this, right, this top, right? That 3100 is definitely going to be an area of resistance. And I'll tell you, this area right here, that 3097, that's no slouch either, right? Top, right? I mean, look how many times they've hit this area. So really, I mean, you could expand this triangle, this rectangle out like this and say this whole area up here is, you know, buyer beware, right? Buyer beware. As we go higher, this is where, as we go higher up here, that's where all the buyers who bought here, right? That's taking profit. That's where the buyers are cashing their paychecks up there. We don't want to be buying up there. And we really can't make it a habit of selling up there because it's not a bear market. And we'll talk about some options here today, right, to trade the reversal here as well. The next thing, obviously, is this measured move. The measured move is pretty interesting. You've got that big move up. You've got that second leg. That puts us right around that 3106 and change up there. Now, that's not so interesting. But when you look at this in a little bit more intimate setting here, right? You put a little more of a smaller measured move on it. And now, wow, it's a pretty much identical up there at that 3106 half area. So again, I would assume that's where they're trying to go. They're trying to get to that 3106 area, right? As comfortably as they can get. But obviously it's not going to be easy as this thing tries to go higher here. So we know, so bottom line is we know the market is bullish. Let me clean this thing up a little bit here for us. That way we're not too overwhelmed. You know, I like to keep my charts nice and clean. You know, I want to make sure I can easily see what's going on here. We know we have a bull market. We know they are rejecting off that high, or at least they haven't shown us acceptance through that high yet. They may. You know, we're just opening up right now in Asia. So we know the market. We know this market is, of course, bullish, but we're running into that level of resistance. I want to find a level of support that I can use so I can buy comfortably without having to buy into this level of resistance. And again, I've got a range on here. This range may prove to be the big piece of the puzzle here for tomorrow. So we'll definitely keep an eye out if it sits inside that range. What do we do inside of a range? We do nothing, right? Nothing at all. We sit on hands. But that range does tell me, though, where my buy zones are. And again, we expanded those sell zones up overhead, right, for obvious reasons. So I know that this area here is where I want to buy. Okay, I know that area down there, 3088 to 3082 area, that's going to be where I want to buy. And I can really dial this in by seeing that trend line too. Now, just like we talked about on oil, there really are three different types of situations that you want to be ready for, right? One is that relatively shallow pullback. Two is going to be that real deep pullback, okay? And then, of course, the third one is going to be that two-legged pullback. Right? That two-legged pullback. So we know, first of all, we know where the first buy zone is, down at that 88 and a quarter, 80, right, 85 area there. If I can get that pullback here, right? If I can get that pullback underneath that trading range, I don't need to go all the way down to that trend line. I'd like to, but I definitely don't need to. Clearly, buyers were happy right there. Right? I assume now once we see that shot going lower, that moving average comes over. The sellers will try to foolishly sell that counter trend breakout pullback just like they did here. And then what happened before? They tried to take it lower. They tried to sell off the moving average. That didn't work out. What happened? It ran higher again. We're going to look for that same pattern somewhere over here. We're going to wait for that market to pull back. Okay, it's not a bear market, it's a bull market. It's not a bear market. So sellers who come in and try to sell off that moving average pullback, they're on the wrong side of the probabilities, right? That's the key. Okay, forget about the wrong side of the market. They're on the wrong side of the probabilities. The probabilities right now are much better to go back to retest the high than to go back to retest the low. Now that may change if we can get a 1, 2, 3 reversal, but we're not there yet. Right? That tells me now where those stops are. That tells me now where that pain comes in, and now there can be a buyer into that, right? Into those stops. And then again, if we can get a good pullback on this, I can grab that as a pullback combination. Again, it's a failure into pullback combo. Now, as I mentioned before, sometimes that pullback happens right inside the range, and I wouldn't recommend taking those pullbacks. See that one? That's the same pattern. That's a failure. And look at the pullback. See how the pullback is right inside that range? That's not a very good risk-reward ratio up there. And when you can't risk small to earn large, you're not going to have a very good winning percentage on those trades, right? See, if I can get on a failure, if I can take a failure, I can risk small to earn large. But if I get that pullback, right, that pullback's right there, right? I can't risk small to earn large here. There's very little reward left over. And because there's very little potential reward, you're just not going to get a lot of traders to get off their rump and put the money to work in the market, right? They're not going to be convinced. It's not going to be enticing enough. You got to give them a better entry price. And what's going to happen is the better the entry price, the more reward there is for the risk, the more people will take that trade. And because the markets work with the self-fulfilling prophecy, it'll increase your odds of success. Now, don't forget, we may also see, we saw how fragile it was earlier. We may also see it run lower again, right? This is where we now go into that secondary zone. Now we are hitting that trend line. Right? Now we are running into that trend line now. So trend line now is hanging out over or below us here. We take off the downside. Now at this point now it's a very strong move down, right? Very deep pullback. The bears now, they're going to be convinced they've got control of this. Whether or not they do or not, we still have to anticipate those bears. They're going to try once. They're going to try twice probably, and then we can get that run going higher, right? You want a good example of that? Just look back here, right? We make a run going lower, right? The bears try once, the bears try twice, and then they get that big run going higher, right? And that's a good example of what I mean earlier by there needs to be two separate attempts, right? You want this to be two very obvious attempts there for those sellers. Once we get the two tries, and again, we call this a nested variation of the pattern. Once we get those two tries, then we know where stops are, and we can buy right into those stop losses, right? Most importantly, too, is that we can look for, oh, come on, you're killing me there. We can look for that failure here into a pullback and back over, right? That failure into a pullback, just like we saw back here, right? It fails into a pullback and then runs up higher from there. So if we get that strong move down, let them try once, let them try twice, then buy it back up, right? After those bears have tried a few times off that moving average. And again, don't be afraid here to grab that as a failure, right? It's a nested failure into a pullback combination. That is very, very common and very reliable, again, as long as you wait patiently on that really, really deep pullback. Then again, keep your eyes open for a 2LP. The two-legged pullbacks, it'll pull back, try to go higher, go lower here. Now you want to grab that trend line. Now, notice how I draw this real quick. I'm not talking about a move down, then pull back. Okay, don't worry about that trend line. Like back here, right? Yeah, see that right there? That's not what I'm talking about, right? What would have happened would have been 1, 2, right? It's an earlier pullback or pull up, right? It's earlier, then it goes down. Draw that trend line over. Now we're going to use that trend line, right, as our key level of support, right? That two-legged pullback pattern. So now we've got 3 decent setups here we're looking for here, right, as we go. Now, we talked about this on the oil. What's the plan as the price goes higher? Can I sell as we go higher? Yes. There's always the potential for a short off a major level of resistance, but it's a bull market. So we've got to be a little more careful. What's the best pattern to get a reversal above a range? A crown reversal. We go up, we pull back, 1 try for the bulls, 2 try for the bulls, trap high, and we can sell back down again. Now this one, as I always remind you guys, this reversal pattern, however long you think it will take, double it, if not triple it. Okay, this reversal pattern, okay, it will take a while to develop. It's not going to happen within 5 minutes, right? More like 20, 25, maybe 30 minutes to get that reversal. Okay, what will happen is the market will go up, it'll pull back, the buyers will try to buy the pullback, the buyers will try to keep it going, they'll fail, they'll go to a lower low. That lower low now tells me buyers will try a second time. Okay, this is where the buyers have to put up. They've got to put up a good run here. If they don't, now the buyers will have tried once and twice, and the sellers are going to smell that. They're going to smell that desperation in the bulls, and when they do, if they get a nice strong signal there coming off, right up, what I want a nice strong signal, trap high to sell this puppy back down into the range, but more importantly, most likely all the way down to the other side of that kind of expanding triangle, if you will. And that might end up becoming our biggest clue here for tomorrow. So that's the best way to sell it. Right? It's called a crown reversal pattern. The key again is wait for those buyers to try once, wait to try twice. Notice how I draw it. It's a lower low on the 2 try and a trap high above. It's a very specific pattern, and again, it will take a lot longer than you probably think it will. Now, as we go higher here, we know where the market's trying to go, right? They get the big round number overhead, they get the retest of the all-time highs, and of course that measured move. There are ultimately 2 scenarios I'm watching for here tomorrow. One is going to be the 1, 2, 3 breakout. In other words, it's a breakout going higher. If we can get that 1, 2, 3 breakout, what I'll do is I'll mark up that swing, draw a trend line off those highs, bring that trend line down to those lows, and buy the low of that channel. Now, this takes some patience because you're not going to be able to buy that first pullback. You're not going to want to buy that first pullback. We're just not there. We're too high. We're not in the right spot to be getting aggressive. You can get aggressive before the market retests those highs, but we're right there at those highs right now. You're going to want to wait for that 1, 2, 3 break higher, and then again buy that pullback right off of that low. At that point, right, target is of course up at that measured move. Now, we may also get that strong run higher, right? If you get that strong run higher, again, I would not recommend buying that pullback. I would recommend waiting for the rookies who can't help themselves to buy that pullback and wait for a trap. Traps are always going to be, if you don't get the 1, 2, 3 breakout, then you know you're susceptible, right? If we get a 1, 2, 3 breakout, the buyers have proven to us they mean business. But if it just runs right up, why can't it do this? Why can't it run up and run back down again? It can. And oftentimes it will. It'll run right up. It'll get whatever they're looking for and come right back down again. That's why I recommend if it does run higher, be very careful. Remember, just because a pattern has a low probability doesn't mean it's not going to work, right? It might work, but be aware that is a rarity, right? That is a rarity at those extreme prices. What I'd rather do is err on the side of the probabilities. The probabilities are much higher if I'm buying with a trap. Remember, trading is nothing more than pattern recognition and long-term probabilities. We don't want to take every single pattern. We want to take those patterns based on what's the likelihood of this pattern working hundreds of times, because as you probably have heard from, popular books by Michael Douglas, right? Trading in the Zone, you can't predict the outcome of one trade. You've got to take hundreds of trades, and then with that coin toss theory, right, you can anticipate your winning percentages from there. The moral of the story is, play it safe as you go higher there. Wait for that trap as we go. And again, stay out of the middle. If we sit here sideways, and this goes for oil as well tomorrow, right? If we sit here sideways tomorrow inside of this range, okay, this may quickly become a bit of a triangle. It may start going sideways here as we go. If that's the case, we're still bullish. We still want to buy down here. But if we go sideways, you just focus on that pattern right there, right? Wait for it to come down. Wait to get the moving average coming over. Wait for those sellers to clearly show up off the moving average and buy right into those stop losses. Same basic pattern over and over again. In my experience, usually when you have a range like this, and the market breaks underneath the range, usually that level now is right below that area, right? Usually that's where everybody's waiting. So ideally, I'd like to get down around that trend line, but again, it won't be absolutely necessary if the market goes sideways here, right? We start going sideways, just get underneath the range, get that moving average coming over, wait for those bears to commit, then you got them right where you want them. Now we just need to wait for that seller to fail, and we can buy right into those stop losses. And again, stay away from that range. Last but not least here, what does a reversal look like? A reversal is not going to be as easy as we think it will, because even if we get a 1, 2, 3 reversal, we're still going to be hanging out down around these lows, right? So if we get that 1, 2, 3 reversal, I'm going to be looking for a crown reversal off the low. I'll be looking for that 1 try for the bears, 2 try for the bears, and that crown reversal. Okay, that's the same sell pattern we talked about selling off the high, right? But again, remember how we draw this thing out here, right? It's a trap low. That's the buy off of that low. So if they do get that move lower down to the low of that channel, be very careful where you are, right? You're at the low of that big wide channel we talked about a few moments ago. And so because of that, I have a very hard time selling down there. But I also know it'll be very bearish once we get down there, won't it? Yeah, it'll be very bearish by the time we get down there. So I don't want to sell into support, but at the same time, I can't quite buy it yet. What's the best way to buy in an overall bear market? A reversal pattern. My favorite reversal pattern is that crown reversal. And again, I'm just simply drawing this up for us right now. You can find a whole lot more details on all of these patterns by grabbing that link in the upper right-hand corner, or right in the description of the YouTube video tonight, you'll find all the links to register for our free trading classes. Let's keep going. You guys have a pretty good idea there for the S&P here for tomorrow. And don't forget, we're going to do it together tomorrow morning in our trade room like we do every morning, right? So that way you're not alone and doing it all by yourself. Let's grab some Nasdaq. Now the Nasdaq is, at first glance, the first thing I think about for the Nasdaq is lower highs, higher lows range, right? I mean, if I was to clear everything off this chart right now, the first thing I would think of is this is a range, right? That's kind of the first thing that comes to my mind when I see this market, right? It goes up, it pulls back, it goes up, it pulls back. it seems like the buyers aren't able to hold, the sellers aren't able to hold. And anytime I see a market that can't quite make up its mind, it's probably going to be a range-bound market, right? If it looks like a duck and sounds like a duck, it's probably going to act like a duck. So that's the first thing I think of, which means whenever we have concerns about this being a range, we want to make sure we're buying low and selling high. So you talk about something to avoid tomorrow. What you don't want to do tomorrow is buy high or sell low. Okay, so if you're a Nasdaq trader, you know exactly what you should not be doing tomorrow. You should not be buying it as it goes higher. You should not be selling it as it goes lower. Now think one step further. What's the best way to avoid selling it as the market goes lower? Look for failures. Right? Same thing. What's the best way to what's the best way to avoid buying it as it goes higher? Look for failures. So imagine there's a big range out here for tomorrow, and that might be what we're dealing with here for tomorrow. As the price goes down, I want to buy. As the price goes up, I want to look to be a seller. Now, obviously, because the overall market is bullish, we want to be more buying than selling. Or if we are going to sell, we want to use that crown reversal, right? That nested failure, if you will, with that trap high. Okay, so now we kind of have an idea of kind of what the overall wrap your arms around this market. You know, if I could describe it in one word, it would be range, which means buy low, sell high, and avoid the middle of that range tomorrow. And again, if you're a Nasdaq trader, what you know you don't want to do is you don't want to buy high, right? Or sell low. Now, once we know that, it's pretty easy to see. The market ran higher here. You know, if we can kind of boil all this down right now, the most important and actionable information in this chart is we see a nice strong run higher. Then we get clobbered, right? That big move down. The big move down, though, didn't go very far. You'll notice it goes into that first deviation. That means all I need now is to wait for those bears come in off the moving average, and I can buy right into those stops. Okay, now what should happen there? They should go right back up to retest that high. Did they? No, they didn't. In fact, they did even less than the S&P. They clearly are hung up on this area right here. Okay, so we went up. Buyers, of course, got a perfect opportunity to buy the pullback. They loaded the boat, right? The buyers loaded up their positions there, and it obviously made them some money, but they didn't get back to retest the high. Okay, now that allows me to draw a trend line down. Okay, trend line coming up. There's that triangle again. So we keep coming back to this idea that's a range. Man, they really got a great setup too. Drawing off those highs, down to that low. Just a beautiful example of how a hidden channel, right, combined with a trading range like this can really line up for some great areas. And then all you need is just to wait for the pattern, right? That one's not as dramatic as the S&P. You can see a little wick right there, a little wick to wick right there. Yeah, pretty obviously bears were coming in and trying to foolishly sell that pullback. So now we know the buyers had everything they needed there and they couldn't get the job done. So we know the market is bullish. I definitely wouldn't say it's a bear market right now, that's for sure, right? Even though it was a very strong move down, the bears were unable to hold the pullback, right? It's not like they held it and kept it going lower. They didn't get a 1, 2, 3 reversal, as we call it. So we know these bears don't have control right now. It's a bull market. It's into a range. What does that tell me? Buy low, sell high, avoid the middle, right? I want to find levels of support. So what I'll do is I'll find my trading range. The trading range helps me find my support levels. I want to buy now underneath that range. I also love me some expanding triangles, right? And again, oftentimes, right, that's a level of support I really care about for tomorrow. Also, too, a lot of times when a market pulls back underneath a range like this, a lot of times now the buyers are hanging out right underneath that low, right? Buy orders just waiting here right now to get some fresh orders in if it pulls back below that 82.40 area. So that's definitely something that we want to keep our eyes on there, right, as well. So we know that area, 82.40 area, right? That's a great spot for it. And again, a lot of this is repeating myself here from the previous charts. If we can get a relatively shallow pullback, right? Moving average comes over. The bears will come in and try to sell off the moving average. And once we have them, we want them. Now we can buy into those stops and finish off that move, going back up to retest the high. That's a pretty easy plan. Okay, it's worked pretty well right this week so far for these buyers. Might as well keep the plan going tomorrow. But what if we really tumble though? You know, we get underneath the trend line. We get down to that secondary range deviation down there. And it really, really tumbles down now. Remember, there's the low of that big channel. Remember, this is that big channel. Same situation for the S&P. There's that big channel we talked about in last night's newsletter. So we got that trend line down there. That will definitely be where you have more buyers waiting down there. So as we go lower, zoom back in here for you. As we go lower here, if we really get crushed and the market slams lower, right, not to worry. It's not really a bear market yet unless we hold that pullback. But again, in that situation where it really pushes lower, let those bears try once, let them try twice, and then we can get that rally going back up, right, to retest those highs. And again, keep your eyes on a failure. This would be a nested failure, right? Slightly different term. We call this a nested failure because it's kind of a failure inside of a failure. As the market runs and really slams lower, those bears now, you got to give them the benefit of the doubt. Once, twice. There's two patterns in there. That's why we call it a nested pattern. We then know where the stops are, failure pattern, into pullback. And as long as we get that pullback before we run to that range, okay, that will be an easy trade to take there, right, as we go higher. Now, sometimes what happens is, just so you know, sometimes the market will pull way back like this. The moving average will come over. You'll see the failure, right, the 1, the 2, and the market will just run, right? It'll run, and you won't be able to get a pullback. In those scenarios, okay, right, in those scenarios, it oftentimes will leave you with a trap. Watch that trap low. Because if you can get that trap before you complete that swing back to the highs, tons of buyers now are waiting there. Does that make sense? So if you get the failure, but you don't get the pullback, and we end up going back into the range, you know what I mean? When I go back into that range, I don't want the pullback anymore. I want the trap low. Why? Because what is a trap? Traps are the best for avoiding buying high. So anytime you're wondering, anytime you're worried, boy, I don't want to buy into resistance, look for a trap. Okay, the ideal is that failure into pullback, but if we don't get that pullback after the failure and it goes higher like that, just wait for that trap low. That trap will be your next best option there, right? And again, I've got a lot of examples of these traps and failures and nesteds inside of that free course I mentioned. It's linked up in the description of the YouTube video. Okay, so now we kind of know the lay of the land here as we go lower. The biggest thing for the Nasdaq, stay out of the middle. What if we go higher here? Or if we go sideways, right? If we go sideways, not much changes. If we go sideways here for a while, just wait for it. 1 try, 2 try, back up in. Or if it really gets clobbered, right? Nested, 1, 2, back in from there. As it goes higher, before we try to buy it, where's it trying to go? It's trying to go back to that 8,300, that big round number, which is also a measured move. So all-time highs are waiting up there. Measured move is waiting up there. It's really important you know where this market wants to go, because if we get this thing to jump, right? Obviously, if I get the 1, 2, 3, 1, 2, 3, that'd be great. If I could jump up, I'm not going to buy that pullback, right? Not a very highly probable trade. But if I can get that jump off of it, and I can get into it before we get to that measured move. That's the key. It's got to be before we get to that 8,300. I can look for that 1, 2, 3 breakout, or 1, 2, 3, 1, 2, 3 breakout in this case, into a hidden channel pullback, right? So if we go higher here, 1, 2, 3, mark up that high, find that low, buying off the low of that hidden channel. That's probably not going to be likely. I would imagine if it does keep going higher, it'll be that strong run up. We don't want to buy that pullback up there, do we? No, that's for the rookies. You're not a rookie anymore. When you work with me, right, you know what you're doing. You're not going to make that mistake buying high up there. Why? Because you can't risk small to earn large. Why is it important? Because if there isn't a good amount of reward for the risk you're going to take, you're not going to be able to convince all the professionals in the market to take that trade with you. And if you make it a habit of trading against professionals, if you're trading only with the rookies, you're going to get what other rookies get. Blown accounts, lots of commissions, right? And get nowhere in your career like I did, like most people do for the first 2 years of their career. So don't buy the pullback. Wait for that trap low. And again, the one criteria here is you've got to get that before you get up to that 8,300. All right. If it gets up to the 8,300, if it gets all the way up like that, I would expect a range up there, right? Anticipate a range up there. If it sticks up there, then 1, 2, and go from there. We'll obviously explore all those opportunities tomorrow morning in our trade room, 8 o'clock Eastern time, right? Be there or be square. And speaking of being square, let's talk about some gold, right? Gold's looking pretty square right now. Now, I'm sure some folks will look at this and say, you know, it's a bull wedge or a bull triangle or a bull pennant or whatever you want to call it. It looks to me like the gold here had a real strong move up. They held the pullback. You know, we talked about this last night on the newsletter, but they really couldn't get very far. It's quite obvious there's something standing in their way right now that's keeping these buyers from buying high. A classic example of rejection, right? Buyers are, for whatever reason, they just don't want to buy high up there. Okay, they're getting rejected up there. Now, sometimes it's not the buyers, it's the sellers. You know, remember, if you look left here, it's pretty easy to see why sellers, right, long-term sellers, could easily be seeing this as a gift. Okay, this is something that finally, we're getting a pullback and I can sell here right now. So I definitely can see that it might not be the buyers who are getting rejected. It might just be a wall of sellers that are coming in here. Now, the good news is as I mentioned earlier in the video, you know, markets like oil and the Eminis, they've got all kinds of resistance here overhead. The gold, I mean, gold is like unlimited. It's like free space up here, right? It's like being in the middle of nowhere. Plenty of space if this market can start tearing higher. And that is a really big, important clue here, because now we have a different set of responsibilities as the market goes higher. So we got a lot to talk about here on the gold. I know I'm running late here on this video right now, so I'll make sure to speed myself up. But the most important thing right now, though, is we know we're bullish. We know we're into a range. What does that tell me? Buy. And buy where? Buy underneath that range. I've got my range. That gives me my buy zones down here, right? I want to buy below that range. I can also see a beautiful hidden channel here. That gives me a gorgeous area to be a buyer right in the same spot. And then let's add one more. 1 bounce, 2 bounce, 3 bounce. I call these reversal lines around that 59 area. That is a beautiful spot. So as you can see, there's no shortage of levels of support we can buy off of. It really only that matters right now is give me a pullback, right? Do we get a relatively shallow pullback, you know, down to that first deviation area here, right? I want to be, at the very least, I would like to be at least down around that 58.6, you know, 59 area there, right? But again, I want to see a pullback. Ideally, get as low as we can, get that moving average coming over. Bears will come in. They'll try to sell off of it, undoubtedly. And we'll try to be a buyer. Again, buying into those stops, target up to retest that high. Or maybe they get knocked down a bit. Again, I think a lot of this is sellers, right? I don't think these are buyers getting rejected. I think those buyers are getting absorbed by all those sellers that are coming down overhead. So if they really get their way and the market runs lower here, okay, now we're in that second deviation now. Now we know, okay, now we've got to be more patient. Wait for them to try once. Wait to try twice. By the way, that's called what, a nested? Yeah, nested failure. Remember that pattern? Nested failure. And again, keep in mind, it may end up pulling back here as well and getting in on a pullback as well, right? So nested failure into pullback combination. Pretty easy pattern. It's just you got to wait for it. That's all. Got to wait for it, right? Set strong move down. Or we might get a 1-2 pullback, right? 2-legged pullback. Draw the trend line over, up and over and go. Now, I should also mention, too, I'll try to give as much as I can to you guys on this video. If we do end up getting that 2-legged pullback, the ideal is we go up and over and in, right? We go up and over and we buy that low, target, of course, up around the high. But you will see from time to time, the market will go like this. It'll jump up and it will hold and go. Okay, what do you do in that situation? Do you buy and hope for the best? No. Trading is all about probabilities. If you buy inside that range, your odds of success aren't very good. Yes, it might work out. Again, the probabilities don't tell me, will this one work? The probabilities tell us if I took dozens of these setups like this, would I be successful? And you won't be very successful that way. So if it does run higher, wait for a trap. Okay, just like I talked about there on the Nasdaq a few months ago, if we don't get that pullback and it runs back up into that range, does that make sense? Why a trap? You don't want the pullback because the pullback will put you too close to that range. You want that trap low. Traps are always going to be our go-to pattern if we're worried about buying what? Buying high, right? Buying into that range. And again, why do we worry about buying high? Because it requires us to risk small and earn small. We don't want to earn small. We want to earn large. That's why you look for that trap, because that trap low allows me now to risk small, right, and earn much larger. Okay, 3 scenarios to watch there as we go. Now, how about as we go higher here? There are really 3 scenarios. Well, I guess you could say 4. One would be a crown reversal. We go up. The buyers try once, buyers try twice, trap high. It's a bull market. So if you want to be a seller in a bull market, you need a powerful pattern. Again, that pattern will take a lot longer than you think it will. Make sure you're getting it up around that 1470 area, up at overhead resistance. Or do we see a 1, 2, 3 breakout, mark the high, find the trend line, bring it down, buy that low? Does that make sense? Right? It's pretty simple, I think, right? So 1, 2, 3 breakout as we go. And again, there is unlimited upside here. So as we go higher, then strong move up, we don't need to trap any longer, do we? So now we can look for a 2-try breakout. Strong move up, 1 try for the bears, 2 try for the bears. As long as we get those bears trying twice up at these highs, again, I don't need a trap on this one. I'd love to see a trap, right? The trap would really make my job easier there. It's not necessary in that situation, though, because you've got plenty of space overhead. Does that make sense? Okay? It's what we don't have above us that is the biggest clue in this situation. Now, as I mentioned earlier, too, because all that open space is there, this thing could really get nasty here. It could really start pumping, right? And if it does, if we start getting that kind of impulsive, runaway type market, you've really got 2 options. Option 1 is to wait for traps, right? So again, it keeps going, right? It's not pulling back. Anytime you see a trap in a short covering rally like that, and how will you know it's a short covering rally? Because a short covering rally will jump away from the moving average. It'll jump away from it. It'll barely ever pull back to it, right? So if we make a run higher here, and again, a lot of this has to do with the fact that, well, it's all of it's because there's so much space overhead, right? There's a ton of open space overhead. If those sellers back here, if they realize we're done, 1, 2, 3 breakout, going higher, mark the channel, buy the low of that channel, we just might not get that pullback. All right, I'm just warning you, we might not get that pullback. It may go 1, 2, and gone, right? And if it does do that, and it, chop, at that point now, it's any traps at all here, right? That's going to be the only thing you'll be able to get into, right? Trap patterns, if you really want to get aggressive with a short covering rally, the big red candles, right? Big red candles. So, for example, if it really takes off to the upside, anytime you see a big red candle close underneath a green candle, that's your buy. But again, this is after we've got proof of this thing just flying higher, right? It never pulls back, keeps going higher, right? Big red candle, that's a buy. But again, this is after they've demonstrated to us we're not pulling back, right? We get the 1, 2, 3, we run higher here. We mark up the channel. We're waiting for that pullback. It doesn't pull back. It keeps going, right? It keeps going. Oh, you want to play that game? Okay, so now I know what's up. Now I know it's a melt-up market. It's a short covering rally, right? Now I know. Only option now, buy every shallow pullback. And again, if you really want to get aggressive, big red candles, right? Take one contract, buy the big red candle. Yeah, not every trade will be a winner, but there'll be so many opportunities, you'll end up in the green in the end. It's the only way you can trade a melt up or a short covering rally. And then last but not least, a bear market, 1, 2, 3. Absolutely, this could easily be a 1, 2 reversal, right? Just make sure you get it though before you get back down to that low. 1, 2, 3 reversal, getting it back before that low. Really, really great stuff. All right, guys. Boy, oh boy, what a great job out there today. Hope you guys learned a ton on the video tonight. Watch out for that short covering rally, but keep in mind, you cannot apply the same aggressive buy strategy on gold. You can't apply that to the Nasdaq, the S&P, and the oil right now. Why? Because the S&P, the oil, and the Nasdaq are all right up against those all-time highs, right? Or close to those levels of resistance. So be conservative and be patient on the oil, the S&P, and the Nasdaq, but you get to be a little bit more aggressive on that gold. Guys and gals, don't forget tomorrow morning we're going to do all of this together. I know I've covered a lot in tonight's video. I know I'm late here for you guys as well. I appreciate you sticking around with me here tonight on this video. So don't forget, get registered. Come out and join us tomorrow morning. Come execute the plan with me tomorrow. That way you know you're doing it the right way the first time around. If you're on the website right now at schooloftrade.com, it's the advanced course is what you want. If you're on YouTube right now, check the description of this YouTube video. I'll put all the registration links for tomorrow morning's trade room as an advanced member in that description. If membership is not quite right for you yet, not to worry. We have one of the best free trials in the business. That free trial includes your free pass to our trade room, the free trading course, hundreds of examples of how we apply this strategy to our favorite markets. Make sure you grab the free trial. And don't forget, if you have any questions, call me right there. Use that toll-free phone number. Pick up the phone and call me anytime you guys have any questions. I'm always here with live support as well. Thank you so much for tuning in. I apologize for the lengthy video here tonight, but if you're watching here still right now, you're part of the 1%, and I know you're going to be successful with this tomorrow. I'll see you guys tomorrow morning at the opening bell, 8 o'clock Eastern time in our trade room. If not, come back and see us again tomorrow night. Same time, same place. My name is Joseph. Thank you so much for being here, by the way. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.